Sakata's constitution, the cornerstone of Munehisa Homma's legendary trading philosophy, lays out timeless principles that continue to resonate with traders today. These rules provide a disciplined framework for navigating the complexities of market dynamics. The concept begins with the time and price ratio, encouraging traders to analyze historical price movements objectively, free from the influence of greed or emotion. This sets the stage for the core principle of buy low, sell high, which emphasizes patience and precision, targeting extreme price levels to maximize profitability. Homma also emphasized the art of position scaling, advocating for a measured approach to increasing positions after significant market moves, a technique famously referred to as the 100 bags strategy. Alongside this, his philosophy highlights the importance of error management, where swift identification and correction of mistakes are key, followed by a necessary pause to regain clarity and focus. Lastly, profit management teaches the importance of gradual liquidation as prices peak or bottom, ensuring gains are secured while minimizing risks. The Sanzan, Three Mountains strategy identifies major market reversal points, focusing on topping and bottoming formations over longer timeframes. It includes patterns like the Three Buddha top, which is similar to the Western head and shoulders top, where the middle peak is higher than the others. There's also the rounded top, or dumpling top, which shows a gradual curve indicating market exhaustion and a potential downward reversal. Additionally, we have the double top or triple top patterns, where the price fails to break resistance after multiple attempts. The inverse patterns, such as the inverted Three Buddha or rounded bottom, represent market bottoms, signaling potential upward reversals. For the strategy, look for head and shoulders, double tops or bottoms, or rounded tops or bottoms near strong support or resistance levels. Confirm the pattern with a breakout of the neckline or a significant trend line. Use volume to validate the reversal, noting declining volume during the formation and increased volume on breakout. For entry, short at the breakout of the neckline for tops, like head and shoulders, and long at the breakout of the neckline for bottoms, such as inverted head and shoulders. Set a stop loss above or below the last peak or trough, and for the target, measure the height of the pattern from the neckline and project it in the direction of the breakout. The Sansen, Three Rivers strategy identifies potential market turning points using three candle formations that signal reversals in price direction. It focuses on key patterns like the Three River Morning Star, which is a bullish reversal pattern appearing at a market bottom. This pattern is composed of a long bearish candle, a small-bodied candle indicating indecision, and a long bullish candle closing above the midpoint of the first candle. The Three River Evening Star is a bearish reversal pattern appearing at a market top, composed of a long bullish candle, a small-bodied candle indicating indecision, and a long bearish candle closing below the midpoint of the first candle. For the strategy, look for Morning Star, bullish, or Evening Star, bearish, formations. Confirm with volume spikes and additional technical indicators, such as RSI divergence or MACD crossover. Ensure the third candle closes above the midpoint of the first candle for the Morning Star or below it for the Evening Star. For entry, long after confirmation of a Morning Star near support or oversold conditions, and short after confirmation of an Evening Star near resistance or overbought conditions. Set a stop loss below the low for the Morning Star or above the high for the Evening Star, and target the next significant resistance or support level or previous swing high or low. The Sanku, Three Gaps strategy identifies potential trend exhaustion by analyzing three significant price gaps during a sustained trend. It signals that the market may have moved too quickly and is likely to reverse or consolidate. The key characteristics include the formation of three noticeable gaps occurring in the same direction within a trend, representing phases of increasing momentum but signaling that the market is overextended. The bullish Three Gaps, or Sanku fumigage, occurs in an uptrend and signals a price ceiling, suggesting it's time to sell or prepare for a reversal. The bearish Three Gaps, or Sanku Neijowari, occurs in a downtrend and indicates a price floor, suggesting it's time to buy or anticipate a reversal. For the strategy, observe for three significant gaps in the trend direction, which are not necessarily consecutive. Watch for signs of slowing momentum, such as smaller candles or declining volume, and combine with indicators like RSI for overbought or oversold conditions. For entry, sell at the third gap in an uptrend near resistance for Sanku fumigage, and buy at the third gap in a downtrend near support for Sanku Wari. Set a stop loss above or below the third gap, and look for reversal levels, such as the nearest support or resistance. The Sanpei 3 parallel lines strategy identifies strong trend continuation patterns using 3 consecutive candles of the same color, bullish or bearish. These patterns provide clues about the market's momentum and the likely persistence of the trend. Key patterns: bullish Sanpei 3 white soldiers consists of 3 consecutive bullish, white, candles, each closing near its high, indicating strong buying pressure and a continuation of an uptrend. Bearish Sanpei 3 black crows features 3 consecutive bearish, black, candles, each closing near its low, suggesting strong selling pressure and a continuation of a downtrend. Variations include the white 3-line advance block, which is similar to 3 white soldiers but shows diminishing strength in candle size or wicks, signaling a potential reversal or weakening trend, and the bearish 3-line star in deliberation, a variation of 3 black crows, indicating the trend may pause or reverse. The strategy involves identifying 3 consecutive bullish candles, 3 white soldiers, or bearish candles, 3 black crows, with no significant gaps, confirming with increasing volume and alignment with the overall trend, and avoiding trading near overbought/oversold zones to reduce false signals. For entry, buy after the third candle in 3 white soldiers for an uptrend continuation, and sell after the third candle in 3 black crows for a downtrend continuation. The stop loss should be placed below above the lows high of the second or third candle, and the target can be set using Fibonacci extensions or recent swing highs lows. The Sanpo 3 methods strategy focuses on continuation patterns that represent a resting period in a prevailing trend before resumption in the same direction. These patterns indicate temporary consolidation during a trend, allowing traders to position for the next move. Key patterns include the rising 3 methods, which appears during an uptrend and consists of a long bullish candle followed by 3 or more smaller bearish candles within the range of the first candle, and a final strong bullish candle breaking above the high of the first candle, confirming trend continuation. The falling 3 methods appears during a downtrend, featuring a long bearish candle followed by 3 or more smaller bullish candles within the range of the first candle, and a final strong bearish candle breaking below the low of the first candle, confirming trend continuation. The strategy involves identifying rising 3 methods, bullish, or falling 3 methods, bearish, patterns within a trend, waiting for the breakout of the consolidation range to confirm the trend continuation, and confirming with volume increasing on the breakout candle. For entry, buy after the breakout of the consolidation range in a rising 3 methods pattern, and sell after the breakout of the consolidation range in a falling 3 methods pattern. The stop loss should be placed below above the consolidation range, and the target can be projected based on the prior trend's length for a continuation target.